Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 18th of November 2021, and this is our second video today, having published our morning update earlier, which we include a link below. In this video, we're going to briefly look at the incredible rise in net worth of some of the world's richest people during a period of virtual economic collapse, or at least economic lockdown. We ask, what did they invest in? And how those of us who have invested in gold and silver performed compared to other asset classes. After all, it is important that we review our investment portfolios. So let's take a look. Something I suspect we all do from time to time, and most certainly should do, is to review our investment portfolios and wonder how well have they performed. Now, before we do that, let's just take a quick look at how well the top richest people have increased their wealth in just the last year, and by how much it's gone up. And then perhaps we'll look at the various asset classes and compare how well they have performed over the last 10 years. Article published by inequality.org, dated October 18, 2021. Billionaire wealth, US job losses and pandemic profiteers. Since the beginning of the pandemic, the Institute for Policy Studies has partnered with Americans for tax fairness to track the explosive growth of US billionaire wealth, one of the most disturbing signs of inequality during a crisis that has devastated ordinary families. The top 5 billionaires have seen their fortunes expand even more rapidly than the US billionaire class as a whole. US billionaire wealth surged by 70% or $2.1 trillion during pandemic. They're now worth a combined $5 trillion. American billionaires have grown $2.1 trillion richer during the pandemic, their collective fortune skyrocketing by 70%, from just short of $3 trillion at the start of the COVID crisis on March 18, 2020, to over $5 trillion on October the 15th of this year. Not only did the wealth of US billionaires grow, but so did their numbers. In March of last year, there were 614 Americans with 10-figure bank accounts. Today, there are 745. The $5 trillion in wealth now held by 745 billionaires is 2/3 more than the $3 trillion in wealth held by the bottom 50% of US households, estimated by the Federal Reserve Board. The great good fortune of these billionaires over the past 19 months is even starker when contrasted with the devastating impact of coronavirus on working people. Almost 89 million Americans have lost jobs. Over 44.9 million have been sickened by the virus, and 724,000 have died from it. We take a look at the top billionaires. We can see here, Elon Musk's net worth has risen from $24 billion to $209 billion in the last year alone. Jeff Bezos, who is now the second richest man, has moved from $113 billion to $192 billion. Bill Gates from 98 to 132. Now, some of these figures will vary because we have even more updated figures. Mark Zuckerberg from 54 to 117. And we'll see in a moment how these figures have even changed since this report was published. Nevertheless, look at the rate of growth of those billionaires, and this goes all the way down. So US total of 2.9 trillion rising to 5 trillion. Forbes article headline, Bill Gates' rank on the Forbes 400 is the lowest it's been in 30 years. Now, as mentioned in the introduction, although this article is based on Bill Gates, That's not the point, and he is not really the object of this discussion. However, we shall read the relevant aspects of the article. Microsoft co-founder's long streak as the country's first or second richest has ended, in part due to stock transfer tied to his divorce. For the first time since 1991, the Microsoft co-founder isn't number 1 or number 2 on the Forbes 400, which annually ranks the richest people in the US, while Gates' fortune jumped by $23 billion from a year ago to an estimated $134 billion. It wasn't enough to catch Amazon's founder Jeff Bezos, Tesla's CEO Elon Musk, or Facebook's CEO Mark Zuckerberg, whose fortunes reached new heights thanks to their respective companies' rising share prices. Gates came in behind those three, landing at the number 4 spot. But the stock market isn't the only reason Gates is down from number 2 last year. A chunk of Gates' net worth, at least $5.6 billion worth of shares in publicly traded companies, has gone to ex-wife Melinda French Gates after they announced their divorce in May. Nearly a quarter of Gates' fortune comes from his estimated 1.3% stake in Microsoft, worth $31 billion as of September the 3rd. The rest of Gates' fortune comes from his investment firm, Cascade Investment LLC, along with other assets, such as his sprawling $143 million estate in Medina, Washington. Through Cascade, Gates owns a controlling stake in the Four Seasons Hotel, 14% of car dealership AutoNation, shares of waste management firm Republic Services, tractor maker Deere & Co. and Canadian National Railway, and much more. Gates' fortune is predominantly made up in various asset classes, but primarily based on equities and investment in companies. Gates dropped to number 2 in 2018 when Bezos overtook him for the first time. In late 2020, Musk flew past Gates thanks to Tesla's staggering stock market rally. And in August, Gates slipped below Zuckerberg for the first time, due largely to his stock transfers to Melinda. But the billionaire rankings are fickle. After we finalised the 2021 Forbes 400 list, an unusually long Facebook outage Monday, as well as scrutiny related to teen mental health, pushed down Facebook's stock price, putting Gates back up to the 3rd richest person in America. The richest man in the world currently is Elon Musk. And we can see, if doing a quick Google search, Musk has a net worth of around $279 billion, the richest person on the Bloomberg Billionaires Index, and ahead of the second wealthiest Amazon.com Inc. founder Jeff Bezos, who has an estimated $203 billion. Yes, if we look at Jeff Bezos, we can see $203.9 billion. Then Mark Zuckerberg, estimation $125.5 billion, although it says 124 below. And he is, of course, CEO, chair, and co-founder of Meta, formerly Facebook. And having seen how the metaverse has gone absolutely ballistic in the cryptocurrency world, we have very little doubt that his wealth is going to rise further, unless, of course, the criticisms of Facebook, which has recently occurred, particularly, actually cut into that wealth further. We remember that when this guy was worth $13 billion. It was not that long ago. And then Warren Buffett, perhaps the most famous investor of all time, is only worth $103 billion. Now, we all know that the common factor with all of these individuals is that their prime investment, now of course over time it will have spread, but their prime investment has been in their own companies that they themselves have either established or joined early. and the growth in that company's stock market valuation, which frankly far exceeds the company's earnings. This is normally assessed, a company's earnings and share price, by what's termed the price to earnings ratio. In other words, how much higher is the price of that equity or stock compared to what it earns in that year. Now, when we take a look at those company earnings, we can see that Berkshire Hathaway, Warren Buffett's company, has a price to earnings ratio of 8.6. In other words, its price is 8 times larger than its annual earnings, which therefore suggests that it will take 8 years to cover the price of the equity, which is deemed in all fairness in today's market as a relatively modest price to earnings ratio. However, when we look at Facebook Group, or Meta as they're now known, it has a price to earnings ratio of 31. A little bit out there, we suspect. But not when you then compare that to Microsoft, which has a price to earnings ratio of 54. However, where we start to get rather, shall we say, extreme, Tesla has a price to earnings ratio of 352. Therefore, just assuming, and it's not going to be the case, Tesla's income becomes stagnant, it'll take 352 years to justify the price of its stock. Now, whilst Tesla has the highest price to earnings ratio of the top 10 largest companies by market capitalization, wait for it, the company that has the largest price to earnings ratio is a company called Health Equity. And it has a price to earnings ratio of 6,530. Now, yes, some small companies with enormous long-term potential will have a very large price to earnings ratio for a short time, especially during its infancy. But we are living in a mad world whereby we are valuing companies, huge companies, with price to earnings ratios of 352, as in the case of Tesla, and smaller ones at 6,530. The world has gone mad, and yet we live in a world where there are more millionaires and now billionaires than there ever has been. They're also growing at an exponential rate, and we've entered a new paradigm of what is value. For those of us in the gold and silver space, where real money exists, it's simply unfortunate that in the last 10 years to date, gold is only $159 higher in price, or up 9% than it was 10 years ago, which, allowing for cumulative inflation, that's in the US, since then of some 23%, it means that our gold investment is worth 15% less today than it was then. And silver is actually down over the same period by some $6, or 19% in the same period, meaning its value today, allowing for cumulative inflation, is down a whopping 42%. Now, of course, this will vary depending on which time frame, and we've just literally taken 10 years exactly to today. Now, over that same period, give or take a month or so, Bitcoin has proven to be the best performing asset class by far and is up 20 million %. This is how mad the world is. The Nasdaq is up 541%, not allowing for inflation, but up 541%, and US large caps are up 282%. Average US house prices are up 88%, similarly in Canada. And of course, there will be state and regional variations. There are some regions where prices have risen by 20 or 30% in 1 year, but overall, property has been up on average 88%. So clearly these guys, these top 5 and the billionaires, have been supported in large part by a rapidly growing equity market. And for some now, new multimillionaires from investing in cryptocurrencies. We in the gold and silver space have performed generally badly. Moving forward, though, that does not mean we should give up all hope, but it does suggest that those who have been in gold and silver and have been maximalists over the past 10 years have, with respect, proven to be wrong, and badly so, at least in terms of opportunity cost. Now, no one knows the future, and anything could happen, which is why we were so hard on the pumpers, because back 10 years ago they were encouraging people to become maximalists in gold and silver, and we could see that whilst we felt gold and silver had a bright future, it was going to take some time to recover from their peaks. And this is why today, in our case personally, our own portfolios comprise now of around 50% in property, 20% in equities, though most of those equities are in our pension plans, and we've reduced those of late. 15% is in gold, silver, and precious metals. 10% is in cash, as we are starting to increase our accumulation of cash, not because we necessarily believe cash is good, because we know it isn't, but because we will be expecting some equity decline in the not too distant future. And believe it or not, 5% in cryptocurrencies. So we have more money in gold and silver than we do in cryptocurrencies. The cryptocurrencies is a gamble as far as we're concerned, but certainly with Bitcoin and Ethereum now being adopted by a large number of financial firms, we think they're here to stay. Please note, we have 0 bonds. How well has your portfolio performed, and where do you see investment growth for the future? All of us fully accept that the dollar, sterling, euro, and every fiat currency on earth will only lose value as each year passes. Where we place that fiat currency in the meantime will make a profound effect on our future wealth and the safeguarding of our destiny. Do share your thoughts. Thank you so much for listening. We hope you found this useful. If so, give us a thumbs up, subscribe, press the bell sign, and tomorrow morning we'll have our regular update. Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.